there's two things you can say about the consumer right now: uneven and unpredictable. So uneven means, yes, you have all those things, but you also still have a very strong housing market, and yet mortgage rates increasing rapidly. You do have still strong balance sheets, but you can also see interest rates probably rising and credit getting a little higher. You have geopolitical unrest.
That was Best Buy CEO Corey Berry speaking with Kramer on the consumer. By the way, catch that full exclusive interview at the top of the hour on Mad Money in just a couple of minutes from now. But let's move on to the sports betting slump. DraftKings, Penn Game, Caesars, MGM, and more. All the names in sports betting getting slammed today, despite the fact that you've got Major League Baseball's opening day. It's day one of the Masters. The NBA playoffs are coming up. Everybody's gambling. Contessa Brewer joining us now. Contessa, literally everybody, or as I call you, Tessa, everybody I know in New Jersey and the states that allow it is gambling all the time. Why aren't the stocks benefiting?
Only my friends call me Tessa, and let me explain something about the stocks. It does not matter. It doesn't matter how excited we are over the sports calendar. Over the past week, look at DraftKings, declined 16%, Penn off 14%, Caesars, MGM, they're all taking it on the chin on the heels of a record-setting NCAA basketball tournament, an incredible March Madness that included serious NBA action, the Super Bowl of all golf, and the Super Bowl of all Super Bowls, of course. We are looking at the Masters with Tiger Woods playing. Look, he is driving a lot of the betting action this week. Bally's chairman told me today, it doesn't matter. All of that is already priced in.
And now the current momentum is that, again, sports bettors are now being lumped in with all the other, growth at any cost companies that now have to start delivering real earnings, and people are going to wait and see. I think it's really just a wait and see.
Kim says that Bally's is getting just punished in spite of its prospects for brick and mortar casino success. He says that doesn't make any sense. But it also holds true for Caesars, for MGM, for Penn and Boyd. They've got lots of facilities that are doing great forward bookings. Some of this may be concerns over gas prices. Some of it might be worries over rising inflation, eating into consumer discretionary spending. But look, Brian, my sources tell me they're not seeing it, and historically they don't. And of course, there is a lot of skepticism here around the digital business and when these guys are going to turn a profit on the sports betting, online sports betting, and iGaming, Brian.
Yeah, and maybe it just does come down to boring old balance sheets and income statements. Who knows? Contessa Brewer, thank you. Bonawyn, any of these stocks or the options on these stocks look attractive to you right now?
I mean, of the mix, I would look at something that's a little more brick and mortar heavy like MGM. And typically, I don't really like asset heavy businesses, particularly like in a growth environment. But here you have a lot more levers to pull, whether it be meetings or gambling or things of that nature. I think there's just like a little bit more diverse revenue streams. In terms of like the general sector overall, I think any concern around the consumer is going to bleed into this. And the digital sports gaming platform specifically, it's really a question about target addressable market now versus the future. I mean, while federally things have changed, there's still only about less than half of the states that allow gambling. And so until you start to see a bit more growth there, it's really still them falling into that growth category. DraftKings, for example, still isn't a profitable company, one that I own, one that I like long term. But in this market, I think those names are going to suffer. Add on the concerns about the consumer, and I think that's really going to be it.